Ever wondered what an FSA or a HSA is? They both help you save money on healthcare using pre-tax dollars. But how do they work? And which one's right for you? First, let's talk about FSAs, also known as flexible spending accounts. When your plan starts, you decide how much money to set aside for healthcare expenses. One key thing to keep in mind is that you get the full amount upfront, even though it comes out of your paychecks throughout the year. For example, if you set aside $1,200, you could spend all of it as soon as your plan kicks in, even if you haven't paid it all yet. But there's a catch. FSAs are use it or lose it. If you don't spend that money by the end of the plan year, you lose it. Also, if you change jobs, that money does not go with you. There are limits on how much you can contribute each year, which are set by the IRS. There's also something called a dependent care FSA, or DCFSA, which helps cover things like daycare, preschool, or even after-school programs for your kids. Like regular FSAs, you set aside pre-tax money, but it's for childcare expenses. The same rules apply. Use it or lose it. And there's also a limit on how much you can contribute each year. So now let's talk about HSAs, or health savings accounts. You can only have one if you have a high deductible health plan, or a HDHP, which has lower monthly premiums but higher costs when you need care. With an HSA, you could only spend the money you've actually contributed, but the leftover funds roll over year after year, and the account stays with you even if you switch jobs or insurance plans. Plus, HSAs can earn interest, and you can even invest the money to grow your savings over time. Like FSAs, there are also limits on how much you can contribute to your HSA each year, and those limits are higher for families than for individuals. So what's the big difference? If you like having your healthcare funds available upfront, an FSA could be a good choice, but you have to spend it within the year, and there are contribution limits. With an HSA, your funds roll over year after year and stay with you for life, but you could only spend what you've put in so far. If you're looking for long-term flexibility and savings, and you have a high deductible health plan, an HSA might be the better fit.